Good morning, good afternoon, or good evening. A very warm welcome to all of you. I am Katrien van Marsenille. I'm Marketing Director at VeriPark, and I'm really excited to see so many people joining us from all over the world, from Canada, Barbados, over Europe, to the Middle East and the Far East. So it's still very early for some of you and quite late already for others. So thank you really for being there. I would like to welcome our speakers. So first of all, we have Jeff Casey. Jeff is Senior Research Director, Banking and Securities at Gartner. He's based in the USA. He will explain how to understand the value of the branch and how to craft a holistic recovery strategy. So good morning, Jeff. I'm really looking forward to hear your insights.
Hello, everyone. I'm excited as well.
We have Steve Such. He's digital advisor at VeriPark. He's based in London and will present VeriPark's web-based branch automation solution in two scenarios. The first journey will show how our solutions can help transforming physical bank branches by introducing paperless, contactless, and unified front end. And the second journey shows how our solution is also enabling branch staff working from home to support customer transactions from multiple channels, all from their own homes. So welcome, Steve, as well. We'll
Hi,
hear
everyone.
you in the second part. Hi. And then finally, my colleagues Syed Ali and Vijay Krishnan are joining us from India. They will answer your questions at the end of the webinar. So welcome, Vijay. And welcome, Syed, as well.
Hello, everyone.
Then a few practical things before we start. So if the control panel gets in your way, you can open or close it with the orange arrow. You can also adjust your audio menu there if needed. During the whole duration of the webinar, so while the speakers are talking, but also during the Q&A at the end, you can submit your questions using the questions panel. We will answer them at the end. If we don't have time to answer them all, we will send you a written answer after the webinar. And then a little suggestion, maybe you can start your question with @Jeff or @VeriPark to let us know who you're addressing and who your question's for. And then finally, we are recording this session. So the link will be provided after the session, and you will, of course, also receive a copy of the slide decks after the webinar. With that being said, Jeff, I would like to hand over the floor to you. So.
Wonderful. Thank you very much.
And I would invite my colleagues to turn off their cameras.
Wonderful. Well, welcome everyone to Evolving the Post-Crisis Role of the Branch and Why In-Person Distribution Still Matters. I'm really excited about this webinar today because I think it's a very pertinent topic given the environment that we find ourselves in. So today we're here to answer the question, what is the highest and best use of the branch? As we emerge from COVID-19 and as you as providers seek to recover and grow. Now, banks' digital investments, they were increasing long before this crisis. And still, more customers seem to migrate to digital during COVID. So what then is the future for the branch network as a catalyst for growth? What's the best role that in-person distribution can play? To answer these questions, we need to understand how branches impact customer relationship value. So today we'll look at how positive customer relationship value is created through customer financial empowerment, as well as some recent Gartner research that shows that empowerment is most effective through in-person channels. So over the next 45 minutes or so, we'll explore the implications of that for branch strategy, along with some of the best practices to show you how to deploy the branches as part of a multi-channel ecosystem to ultimately foster growth. Let me also take a quick moment just for a few reminders about the responsibility we all have to keep our sessions safe, which you can see here. If you have any questions about anything on this slide, please feel free to let us know via the chat window. So here's how we'll divide up our time. In digital by necessity, we'll start out with a quick scan of what has changed since COVID disrupted life. Now, I won't spend a lot of time on this, as many of you have been in the thick of these changes, primarily the shift to digital, as well as other initiatives that your bank stood up, like payroll protection plan processing or accommodating other government assistance schemes and small business loans. Then in section 2, the value of branches, we'll assess how branches impact the value of customer relationships. How do we define that value? Do branches best deliver that impact by themselves, or when we sync them with other channels? And ultimately, what does that mean for the current environment? And then in section 3, we'll look at examples of the best and highest use of the branch network for increasing relationship value as we emerge from the COVID crisis. So let's get started. So the headline story in retail banking over the last several months has been that customers have become more digital, and they've done that very quickly. So this is just a few examples that are highlighted when we look at the bank's first quarter earnings calls. So upper left, for instance, Bank of America reported a 6% increase in digital banking users and a 10% increase specifically in mobile users year over year. We can look at the lower right corner. Citi is seeing an increase of 50% in mobile customers compared to 2018. And it's not on this slide, but more recent numbers for the US showed a 200% increase in mobile banking registrations in April compared to March. And it's not really surprising, is it? After all, the advent of COVID had customers moving to digital in all spheres of their lives, whether that's working remotely, at least for those who could, ordering groceries, or to all those Zoom happy hours. So why not banking? Especially with branch access radically curtailed, customers really had no choice but to turn to digital channels and other remote options like the call center. And it happened practically overnight. And I'm sure that all of you worked tirelessly to respond, rolling out and expanding digital capabilities in record time, ramping up e-signature capabilities, increasing remote deposit capture limits, standing up digital platforms, and probably rewriting policies and procedures. You can see on this slide what one executive told us. People thought that this was a face-to-face business, and we always heard it couldn't be done. And then we ended up doing it in 48 hours. Right? So people are talking a lot about the new normal. And I'm sure for many of you, the new normal, at least for several weeks early on in the crisis, probably consisted of 15-hour days. But perhaps the most heartening thing that I saw through this early part of the crisis was the way that internal silos were torn down. It's not on this slide, but one retail banking operations executive told me there was great collaboration between groups and lines of businesses, partly for cultural reasons, but also because everything was on steroids and we knew we had to survive. So what now? Some of you might have seen Gartner's post-pandemic planning framework, which includes the phases illustrated here, from the initial response, moving into recovery, and on to renewal. Now, you'll notice when you look at this that there's no clean breaks between the phases. They all overlap, and they're really fluid. And to be honest, that's the reality that we are all living in right now. Some of us are in the midst of reopenings, and even as we're reopening, there's talks of new lockdowns. So the question for financial service providers is, how do we begin driving recovery and then ultimately growth? And how do we potentially have to rethink the business as we apply the lessons learned and the changes that we made during COVID? What does all this mean for distribution? Will we see a continued acceleration of digital? Or does COVID mean that branches will somehow become less important, maybe as obsolete as handshakes and hugs have become in the current environment? So early on in the crisis, the conventional wisdom was that digital usage by customers was taking a big jump. It was accelerating the digital migration that many banks had been investing in for some time. If we look at the bar in the middle beside each statement, that bar corresponds to early May. This is a survey by J.D. Power. J.D. Power reported an increase over April in the percentage of customers who said that after the crisis, they plan to visit the branch less. That's that top set of bars. And these customers said they would use mobile and online banking more. That's the bottom two sets of bars. But now take a look at the bottom bar in each of these sets. This one corresponds to mid-May, just a week later. And what we saw was there appeared to be a slight decline in those percentages. And even now, if we look at more recent data from the end of August, we see the numbers have jumped back up, with 19% of customers planning to visit the branch less, and 32% and 28% planning to increase mobile and online respectively. So where will we ultimately end up? And it's impossible to know at this point, but I think it could be that as the crisis begins to ease, I think we'll see customers may revert to type and go back to the channels they were always most comfortable with. The problem is we just don't know. One of my colleagues said it's as if we're out sailing and the winds might be shifting, but the direction of the wind still isn't clear. On the one hand, Bruce Van Saun, who runs Citizens Bank, he said that customers who've moved to digital are embracing the convenience. That gives the implication that they'll stay there. But on the right side, you see Jamie Dimon of Chase recently said that people who weren't already digital aren't really picking it up. So I think the jury is still out. But the fact that some banks see an opportunity now to push digital migration even further and reduce the branch networks. Andy Sussery of US Bank said last month, with respect to branch closures, and quote, "I would expect we would accelerate and probably do more given the behavior changes that have occurred and the digital investments that we've made." And he's not the only executive looking at things that way. There's many leaders who have been pushing to cut costs by reducing branch networks who see an opportunity with COVID. It's already led to temporary scaling back of branch accesses. But I don't think it's that simple. I think branches and branch staff, they haven't sat idly by during this crisis. They didn't simply shut their doors and hunker down. They've adapted. And they adapted quickly to accommodate the customer needs in this age of social distancing. In the upper left of this slide, lobbies were closed, but drive-throughs assumed a new provenance. We move clockwise around the picture. In the upper right, branch bankers took on other roles and pitched in to help with critical operation initiatives. A lot of these were loan application data entry. We established dedicated hours for the more vulnerable customers, and systems were stood up for in-branch appointment setting. In the lower right, many bankers remotely staffed the call center as phone volumes increased dramatically. I talked with one executive who said that 40 branch representatives were supporting the contact center remotely from home. Meanwhile, on the lower left corner, physical changes to the branches were made. Contactless terminals and modifications like plexiglass and floor markers were installed. And I think once branches fully reopen, we'll undoubtedly see reconfigurations of platform and teller positions, obviously with greater social distancing, as well as probably systems for monitoring customer volumes. So when I look at this, I think just as the financial service providers had to ramp up remote capabilities in record times, they were also radically repivoting how their branches operated. I was talking with one bank who told us that they changed their branch operating model 5 times in 2 weeks early on in the crisis. They said they were making changes that in a normal time would have taken far, far longer. So I think the question for the industry is what now? Does COVID provide a window for reducing branch networks and really narrowing their scope? Or would that be detrimental? And not just to the staff who presumably would be laid off, but also to customers. And I would argue the value that customers deliver to you as a financial service provider. Is there instead an opportunity to think more creatively about the potential that branch networks have to drive recovery and growth? Stated another way, could this be a chance for branch renewal? To answer that question, we need to understand the value of branches. Now, not so much in terms of the conventional measures like the new business generated versus the cost, but really in terms of the impact branches have on the value of customer relationships, both today and the value of those relationships in the future. Earlier this year, Gartner conducted a customer survey across a number of developed countries, trying to understand how customers' actions drive relationship value. And so we asked respondents whether they had taken different actions across 3 basic categories that could have either a positive or a negative effect on the relationship. The first is advocacy actions. So these are the referral actions, like recommending a provider or telling others not to use a specific financial services provider. Then we've got service actions. So this is a customer who decides to increase the use of mobile app, or maybe they decide to decrease or just stop altogether using some of the services the bank provides. And then we've got revenue actions. So this is when a customer increases the amount that they have in savings, or they increase the loans that they have with a specific financial provider. And you can see when we look at this on the spectrum, how over to the right, positive advocacy, positive service, and positive revenue actions taken by the customer ultimately create a positive provider relationship. And these actions can be taken alone, or they can be taken in combination with one another. And by the same token, the opposite happens over to the left, where we have negative advocacy, service, and revenue actions that are creating negative relationship value. We also created a channel use typology. It ranges from exclusively digital to exclusively branch. Here on this slide, we show the 4 categories of this channel behavior, which when we looked at it really exhibited a measurable effect on the relationship value, whether that was positive or negative. So I'll quickly explain these. Starting on the left, we have exclusively digital, which is, as its name suggests, someone who only uses digital channels and technology. Then we've got multi-channel digital. So this is someone who uses digital channels and sometimes staff. This includes the branch and the phone center. These customers are mostly digital. they interact mostly with technology. Then we get to the third one, the multi-channel branch. And this one's going to be important for our conversation today. This represents customers who use both the branch and other channels, which includes digital. But overall, they lean more towards interacting with staff, or with staff and technology equally, which is still a lot of people interactions. Think of it as a multi-channel with a strong in-person orientation. And again, this will be an important one for our discussion today. And then finally, on the right, we have exclusively branch customers. These are customers who don't interact with technology at all, only the branch. So we took these two things and then we ran a regression analysis to determine how much relationship value customers in each channel behavior category are likely to create through those three types of actions we just saw: advocacy, service, or revenue. And when we did this, we controlled for specific factors like the customer's age, the customer's financial health, the quality of the interaction, and other variables, so that we could isolate the impact of channel behavior on relationship value. And this is what we found. So let me take a moment to set up this chart. The vertical axis shows the change in likelihood of taking positive relationship actions compared to the baseline. And that baseline is right in the middle, that 0%. The baseline was 57%. So 57% of the sample, in other words, were likely to take some sort of positive relationship action, or they were likely to generate some positive relationship value. So three things jump out on this. First, over on the far left, customers with exclusively digital channel behavior were 13 percentage points less likely than the baseline to take a positive relationship action. Second, there are two types of channel behavior which have a minimal impact on value creation beyond the baseline. And that's the multi-channel digital customers, who are 1 percentage point more likely to take positive actions, and the exclusively branch customers, who are 1 percentage point less likely to do so. And then the third point, the channel behavior with the most impact on relationship value is the multi-channel branch category. In other words, customers who use multiple channels but still have a strong in-person orientation. That's the key group. They are 8 percentage points more likely than the baseline to take positive relationship actions. So this data really calls out how powerful the branch is for creating relationship value when we use it in combination with other channels. Again, the multi-channel branch leaning customers are more likely than any other behavioral group to take positive relationship actions. The other thing that this shows is that purely digital channel behavior lags badly in creating positive relationship value. So it's not that these customers necessarily subtract value, it's just that they are much less likely than others to take positive actions that will in turn create relationship value. In fact, if you think about it this way, combine the exclusively digital bar with the multi-channel branch bar, and you see that exclusively digital customers are a total of 21 percentage points less likely to create positive relationship value than their branch-leaning multi-channel counterparts. So this tells us it's the branch usage that is more likely to engender positive relationship actions, but not by itself. It does so when customers use the branch in conjunction with other channels. So with this, we wanted to take it a step further. And we wanted to see whether the impact on that relationship value varied according to the type of thing the customer was trying to do. And we'll focus on two types of activities in particular. I think these two categories of actions, I think they have a special relevance to the current environment we find ourselves in. On the left, the first action that customers are trying to achieve, planning for a significant event. So this is the major purchases. This includes buying a home. It's getting married. It's having a child. I'd say saving for retirement is within this group. And then on the right, we have handling an unexpected situation, unexpected childcare expenses, a medical emergency, a loss of income. Now, I've singled these two out because they're both, in effect, the kind of things that are undoubtedly front and center for your customers in this period of crisis and uncertainty. And these are also the moments of truth that can profoundly reshape a customer's banking relationship. Now, I want to emphasize that our survey was conducted before COVID, but it still sheds light on how customers can have an impact on relationship value depending not only on the channels they use, but on the kinds of things they're trying to get done. So let's take a closer look at that first impact, the impact of planning for an event. I think this is a very salient activity today. I think many of your customers are probably planning for an uncertain future. Often they're doing this on the fly and probably in response to an ever-changing situation. So what we found was that the impact on relationship value tied to planning for a significant financial event across the different channel behavior categories, it's very similar to the overall impact we saw a moment ago. Exclusively digital customers are 13 percentage points less likely than the baseline to take positive relationship actions when they're planning for a significant event. And by contrast, multi-channel branch customers, that dark blue bar, they're 7 percentage points more likely to do so than the baseline. And again, if we combine these together, 20 percentage points more likely to create positive relationship value than those exclusively digital customers. And for the other behavior categories, the likelihood of taking a positive relationship action when they're planning for an event, it really doesn't stray too far away from the baseline, only a couple of percentage points. So again, here, we see the power of customer channel behavior when it's anchored to the branch, but also when it partakes of other channels, that multi-channel branch profile. Those are the customers that, again, are more likely to take a positive relationship action, advocacy, service, revenue, in the context of planning for one of those significant events. So what about coping with unexpected events? Like planning, I think this is also a very salient topic with COVID. COVID in itself was a massive unexpected event, and it also created a chain reaction in many people's lives of additional unexpected events. So again, we see that the exclusively digital customers on the far left are significantly less than all the other groups to take positive relationship actions when they're coping with unexpected events. 9 percentage points less than the baseline, and fully 17 percentage points less likely than their multi-channel branch counterparts. Again, those ones in the dark blue. So I want to emphasize here that the multi-channel branch type of customer is reliant to a significant degree on branch staff, even as that customer uses other channels, which includes digital. It's these customers who are most likely to create positive relationship value when confronted with unexpected events. So, given the importance of both planning and unexpected events in people's lives, and particularly in these times, I think this is very valuable information to have. It shows that customers who use multiple channels but still have a strong leaning to in-person interactions are much more likely to take positive actions with their financial services provider. That in turn ultimately creates positive relationship value. Certainly, there's something going on here with branch-leaning multi-channel customers that's not happening with the exclusively digital ones. These customers they're engaging with you in a way that leads them to embrace their financial service provider with that positive advocacy, that referral, using more of your services, and then taking those revenue generating actions. So in this same survey, when we looked at channel behavior, we also discovered another key theme that I think helps to explain what's leading customers to take those actions. And it very much is related to the things you, as providers, can do that foster customer financial empowerment. So let's take a few minutes and talk about financial empowerment. The fact is that many customers who turn to financial providers for financial products, whether that's a basic checking account, a car loan, wealth management, they find themselves in a financially distressed or financially precarious situation. In other words, they are vulnerable in the very area of their life, personal finance, that they turn to financial providers for, and that you as a financial provider have built your offerings around. Starting on the left, we found that almost half of all retail banking customers in our global survey are financially vulnerable. Now, we're not talking about the unbanked. We're talking about banked customers here. These are your customers, and 1 in 2 is struggling. And not only that, but 3 out of every 4 financially vulnerable customers, they actually have a job. So it's not that the financially vulnerable are unemployed, most actually are employed. But despite their job, or because of the low pay and benefits they get, they're still financially vulnerable. And I think this third data point is also striking. The financially vulnerable are not all below or even near the poverty line. In fact, 1 out of every 4 financially vulnerable people makes over $100,000 a year. We don't show it on this slide, but the income bracket here in the US that has applied the most for credit to help get them through COVID-related financial challenges includes households making between $100,000 and $150,000 a year. And financial vulnerability even affects the wealth management space. On the right, 22% of wealth management customers are financially vulnerable. Again, either outright distressed or in a precarious position. The financially vulnerable are all around us. And it's thanks to factors like stagnant wages, racial discrimination, unpredictable swings in income from one month to the next, customers that have poor mobility, the fact that many people are simply not in a position to call the shots about how money moves through their lives. Try as they may, they're powerless. So in our survey, we identified 8 elements that inform a customer's sense of financial empowerment vis-a-vis their relationship with their financial service provider. Now, some of these things are what they perceive providers actually do. This is the list that you see on the left, while others reflect how customers feel in response, the list on the right. We then took these 8 elements and we matched them with the same actions we previously discussed that could have either a positive or negative impact on the value of customer relationships, advocacy services, and revenue. So let's just take a moment to review the elements that inform a customer's sense of financial empowerment with respect to their provider. On the left, we have things that customers perceive that you as their provider does. They teach me about my financial options. They give me tools to stay on track. They make it easy for me to access new products and services. And they give me easy access to the information about my finances. And then on the right, the things that the customers feel because of what you do. I feel better about the fees I pay after completing a given action. I feel better off as a result of my interactions with my provider. I understand how to apply the information my provider gives me about my finances. And finally, I feel that I have control of my finances. Now, you'll notice that we've put 5 of these elements in bold, and we've put those within those 2 blue squares. Those 5 are the financial empowerment elements that are most likely to lead customers to take some positive actions and thus drive positive relationship value. Benefit in this case accrues both to the customer because he or she feels financially empowered by the relationship, and also to you as the provider because ultimately the relationship value increases. So, like we did with the channel behavior, we determined that these 5 elements have a positive impact on relationship value by asking those respondents to rate the perception of those 8 elements of financial empowerments that we saw on the previous slide in terms of their experiences with you, their financial service provider. And then again, regression analysis enabled us to determine which of those elements were most decisive in leading customers to take positive actions and generate positive relationship value. Once again, here we controlled for the type of interaction, the channel the customer used, the age of the customer, and the quality of the overall experience. And so from that's how we isolated those 5 elements of financial empowerment. Again, teaching me about my option, give me tools to stay on track, make it easy for me to access new products and services. Then I'm going to feel better about the fees I pay, and I'm going to feel better off as a result of the interactions I have. When customers perceive they are more financially empowered, when those 5 key elements of financial empowerment are activated, they are more likely to take positive advocacy, service, and revenue actions with you, their provider. In other words, what we're saying is they are more likely to create positive relationship value as long as they perceive that you are doing those 5 things that help them feel financially empowered. And when we dug in, we found that this is true across all segments. So let me just again quickly set this chart up for you. So we scored just how financially empowered customers perceive themselves to be. And we used that and created an empowerment index based on that information. Then using that index, we grouped customers into low, middle, and high financial empowerment ranges. Here, we only show the low and the high. The dark blue bar to the left in each pair corresponds to customers whose perception of financial empowerment is in the low range on our index. The light blue bar on the right corresponds to customers having a high sense of financial empowerment. Retail banking over to the left, small businesses in the middle, and wealth management on the right. The percentage above each bar is the percentage of those customers creating positive relationship value by taking positive actions with you. So for instance, let's take retail. 79% of customers with a high perception of financial empowerment take positive actions with their provider, and thus they have positive value relationships. But only 30% of customers with a low sense of financial empowerment have a positive relationship. Similarly, in the small business, 81% of customers perceiving that they are highly empowered have a positive value relationship, while just 37% of customers with low empowerment have a positive relationship. And in wealth, the pattern holds as well. 79% of the financially empowered customers have a positive relationship, and only 35% of customers with low empowerment show that positive relationship value. So in other words, if a customer perceives that the provider is activating those 5 key financial empowerment elements that we saw earlier, they will feel more financially empowered and will, in effect, pay you back by taking positive actions. They'll refer you, they'll use more of your services, and they'll create revenue. These actions, again, will have a positive impact on that relationship value. So activating customer financial empowerment is good for your customers, and it's good for you. So what does this mean? How do you empower your customers? So this is a big topic where Gartner has a lot of research, and we don't have time to really explore fully today. But there are 3 core provider actions that are likely to foster a sense of high financial empowerment among your customers. Educate. Teach your customers about their financial options. Enable. Equip your customers with the tools they need to stay on track, and also make it easy for them to access new products and services. And lastly, reassure. Reassure so that your customers feel better off as a result of their interactions, and they also, again, feel better off about what they're having to pay you in fees. These are the fundamentals. These are the fundamentals for fostering customer empowerment in such a way that your customer will reward you for it. Now, digital and digital leaning behaviors we find are not nearly as effective at fostering financial empowerment as people-related behaviors. So here again on this slide, you can see the 4 channel behaviors, one for each set of bars. The first bar in each set shows the percentage of customers in that channel behavior category likely to be highly financially empowered overall. It's lowest with exclusively digital customers, just 17%, but it's highest with multi-channel branch and exclusively branch, 29%. The middle bar in each set shows the percentage likely to feel highly empowered in connection with an event, in this case, planning for a significant event. Again, exclusively digital is the lowest, while multi-channel branch and exclusively branch are strongest, 34% and 32% respectively. These are the customers likely to feel highly empowered. And then the third bar in each set shows the percentage of high financial empowerment that's associated with handling or coping with an unexpected event. Exclusively digital does better here at 26%, but it still doesn't do as well as multi-channel branch at 30% or even exclusively branch at 32%. So what we found here is not only is channel behavior that's anchored to the branch, that's anchored to in-person delivery, most predictive of positive relationship value, as we saw before, but it's also critical for financial empowerment. Now, despite the impetus of some banks to try to capitalize on COVID-induced channel migration by going all in on digital and scaling back branches, I think it's clear that in-person delivery, especially in combination with other channels, it's essential for supporting customers in such a way that they feel financially empowered and then ultimately take positive actions with you, their financial services provider. But that's not all. It's not just that branches act as a catalyst with other channels to foster those positive relationships. They are also key to the success of non-branch digital sales. They exert an aura that is responsible for what is commonly known as retail as the digital halo. So in other words, digital sales do much better when there are branches around. You look at this slide, we illustrate how customers in that inner circle, those in the immediate vicinity of the branch location, they'll use that branch to open accounts, and they'll also be engaged with digital options like mobile. And in that outer circle, the people that are further away from the branch, but they're still within its orbit, they'll gravitate to digital sales options, and they'll do that to a far greater degree than they would have if the branch was not there. So across its sphere of influence, the branch plays an essential role in driving digital sales. And banks know this. As we call out in this gray box, one digital banking executive told us, and I quote, "Our level of digital household acquisition is almost perfectly correlated with branch proximity. So where we have communities without a branch, we don't acquire digital households." Which is kind of paradoxical, right? Digital is typically seen as a convenient, less expensive alternative to branches. And so far, it is focused most on the routine servicing, but new business acquisition has proved a bit more challenging. And we find it actually turns out that digital sales are more likely to be successful when they are in the orbit around the analog sun of the branch. So branches are critical for fostering financial empowerment and also critical for creating positive relationship value. As we saw, when customers anchor their behavior around the branch and use other channels, including digital, they are far more likely to take positive relationship actions, that advocacy action, the service action, or revenue-related actions. And those actions, in turn, lead to positive value relationships. So that answers the question about what the highest and best use of the branch is. Simply put, the highest and best use is to drive positive relationship value by helping to empower customers financially and address needs like planning ahead and coping with the unexpected. I think that alone is a powerful argument for renewing branch strategy and for really ensuring that the branch network becomes an integral part of your journey to recovery and growth as we move out of COVID-19. But even more powerful, I think, when you add to that the fact that branches, just by their mere presence, drive digital sales to a degree that does not occur when the bank has no physical presence. That branch aura creates a digital halo. So now let's spend the rest of our time together looking at two examples of banks that are putting their branches to the best and highest use. On the left, we'll talk about PNC, which positions its new branches as adaptable anchors for a growth-oriented multi-channel ecosystem. And on the right, we'll talk about M&T Bank, which has embarked on a regionally specific strategy of reconfiguring branches so that they become catalysts for growth in key segments. First, let's start with PNC. So PNC is a regional bank in the United States. It has roughly 2,500 branches, assets of about $460 billion. So PNC and its national expansion strategy, it typically complements digital channels with bankers and tellerless branches, which they call solution centers, to help grow its presence in new markets, as well as to create community engagement. These local bankers function as a sort of outbound sales team at workplace events or at community events. So they go out to these events and they get the prospective customers to open accounts online using a digital platform that the customer can access on their own mobile device. So as we show here, the banker goes out to an event. As part of that event, they send a link to PNC's online account opening feature to the participants, and they in turn are able to open those accounts. Most recently, the COVID-19 outbreak prevented bankers from really conducting these on-site events. So in response, the branch group that's responsible for workplace and university banking literally moved overnight to a virtual platform that allows them to conduct appointments and presentations. Still, I think a very effective combination of people and technology. And we don't show them here, but those solution centers, right, those tellerless branches, they're an important part of the expansion strategy. PNC deploys these solution centers in high traffic locations, and they're meant to be collaborative environments where channels like digital, like ATMs, and video all work in concert. They serve as consultative service hubs, but not for transactions. Staff have a consultative role with responsibilities that include problem resolution and financial goal setting. These are analogous to the two customer activities that we talked about, coping with unexpected events and planning ahead. Not having to staff that teller window, again, a tellerless branch, really frees up time for the bankers to engage with customers and also to prospect. Furthermore, PNC, by untying bankers from the branch, by sending them into the community, equipped with the correct technology, it helps grow the customer relationship within the community, but still having that physical location is critical to visibility and ultimately to the digital sales, thanks to that branch aura or the halo effect that we talked about earlier. PNC found that in areas where it had a physical presence, even customers who rarely go to the branch, they're still 2.5 times more likely to purchase digitally than those customers with no branch in their vicinity. So this model, I think, so for PNC, the prevalence of the digital halo combined with the outbound bankers has really extended the bank's reach in a community and an effective use of the branch network. So now let's spend the last bit of our time on our second best practice, which makes the highest and best use of the branch network by reconfiguring it for the segment with the most growth potential. Now this one comes to us from M&T. M&T is a $140 billion bank that has about 750 banking offices. M&T was in the process of reevaluating its presence in the Philadelphia market, which is the 5th largest market in terms of population in the US. And they wanted to figure out how to be more effective in achieving growth. They had 33 branches scattered throughout the region, but they only had a small percentage of the retail market share within that region. And so they considered a lot of different options like the ones you see on this slide. But ultimately, they decided to pivot the branch value proposition to align with a more promising growth opportunity. Here you can see at the bottom of the slide, that opportunity was presented by business banking. Now, one of the key elements here is how they came to that decision. Community-based decision-making was a fundamental element in the strategic repivot. M&T has a culture of grounding key strategy decisions at the local and regional level. And so they've got community banking teams of cross-line of business leaders spread throughout their footprint to make sure that everyone's aligned. And it relies on these teams for local knowledge and guidance on the direction it takes for a particular region. In this case, the Philadelphia team recommended the pivot to business banking. And they also made important decisions about what that new value proposition will be, staffing and training decisions, and then ultimately branch closure and communication decisions. Design thinking was another key element. Now, while design thinking is typically used to improve digital user experience, M&T also uses it to enhance the experience of its physical channels. It solicited feedback from customers and employees on the branch transformation process. This included the layout of the branches. Obviously, now they would have a business as opposed to retail focus. So an ethnographic approach, a user-centered approach, illustrated on the left, this helped the bank understand what the interior of a branch should look like to attract and retain the business clients. Now, the branches continued to serve retail and wealth management, so the bank had to take those client preferences into account as well. M&T actually went so far as to set up a showroom in one of their branches so that customers could come in and test out the new branch layout. And then they incorporated that feedback into the final branch design. Banker-centered design, illustrated here on the right, allowed the bank to anticipate what its bankers would need to be successful. Being trained on the needs of the business clients, feeling comfortable networking outside the branch, and obviously having the right mobile devices and tools. So one of the most impressive things about M&T's branch was that despite closing half of the original branches and redesigning the others, the bank didn't lay off a single staff member. It successfully redeployed employees among the redesigned branches, and the resources that were freed up from the branch closures were reallocated to the redesign and training of those bankers. Now for M&T, this is a brand new strategy. It's still in progress. So it's early to make any judgments about the impact on growth. But still, I think it's a daring, creative way to rethink what the highest and best use of physical presence is. And M&T opted for an approach that reconfigured and funneled resources to select branches so that they would catalyze the growth of that promising segment that had not been fully tapped. So before we finish, I want to leave you with some concrete steps for turning the ideas we've seen here today into reality, both near and in the long term. So let's start with the longer term, that strategy reset on the left. We saw how the branch is part of a multi-channel behavior profile that creates positive relationship value. And it also has an aura that engenders digital sales. Those should become key strategic goals for you. Also, as part of the strategic reset, you'll want to align how your branches operate with the true local potential for engaging customers within the context of that multi-channel ecosystem. Also, stay focused on the concept of highest and best use of channels, like the branch, to seize specific growth opportunities. For nearer term actions, right? Start immediately with the kinds of questions that we pose in the middle section. Ask yourself if the current metrics include the branch impact on positive customer actions. What competency gaps need to be bridged to enhance that impact? And even, are you currently able to measure the digital halo effect that the branch has? And then, over the next 30 days, you can start evaluating exactly how customers use branch and digital capabilities if you haven't done this evaluation recently. Begin working with the line of business partners to ensure that branch performance measurement begins to account for the branch's impact on customer relationship value. And also begin mapping out a model branch redeployment or reconfiguration that allows you to focus on specific segments or specific opportunities. Multi-channel delivery is not new. All of you have a heritage strategy. But it's critical to recast that strategy in the light of the particular power that branches bring in creating positive customer relationship value. Thank you.
Thank you, Jeff, for this very interesting presentation. Thank you for sharing your insights. and sometimes surprising results of Gartner's research. We will, of course, see you again at the end of the webinar, where you will answer some questions. So I would like to invite the audience, if you still have questions for Jeff, to use the questions pane to ask them. And now I would like to give the floor to Steve Such, who's there already. Hi, Steve. Just a little remark before you start, so the audience will notice we have recorded part of your presentation, the demo part, to make sure that everything would run smoothly, even if some internet connections become slow sometimes. So the floor is yours. We're looking forward to your presentation as well.
Thank you, Catherine, and thank you, Jeff. So hello again, everyone. As we said before, my name's Steve Such, and I'm a digital advisor at VeriPark. So over the next probably about 30 minutes, I'm going to give you a quick intro on who VeriPark are, a look at our branch automation vision and the digital branch, and then we're going to jump straight into our demo, where we're going to look at a couple of journeys which will help solve some of the problems Jeff mentioned earlier. So who is VeriPark? We're a software house established in 1998. We've got 21 years of experience in the financial services industry. We have over 600 employees based in 15 countries, with offices from London to Kuala Lumpur. We've got new offices opening all the time. We've just had one recently opened up in Canada as well. So we're a global player with our customers spanning over 30 countries worldwide. And we're proud to say that we're actually still serving our very first customer as well. We're dedicated to the financial services industry and are a leader in working with the Microsoft framework. So today we're going to focus on one of our products, which is called VeriBranch. This is our branch automation solution. VeriBranch is a web-based solution, so it's a modern approach connecting to core and third-party systems. And with its unified front end, is capable of handling the traditional branch transactions and processes that you see for things like teller, seller, and advisor, as well as the branch of the future with self and assisted service, along with the concept of the universal banker. Now let's have a look at our digital branch vision. So we want to help banks transform from being transaction-centric to customer-centric organizations. So how do we do this? We provide a unified front end that empowers our branch staff to transform themselves into universal bankers while still supporting contactless customer journeys in the digital branches. We treat branch as part of our omnichannel delivery. So this allows the customers to complete various banking transactions through assisted support, either in the branch or from branch staff working from home using our web-based branch application. The customer can also contact the branch using their preferred channel, which could be WhatsApp, voice, video calls, or other social channels. And we're also using AI and machine learning to enhance the customer service, whether that's from OCR capabilities to next best action. All these things are helping improve turnaround time, reduce manual errors, and drive down costs while increasing the service efficiencies. So this is a view of how we approach the branch project. There are various journeys here. Some are low value, some are high value. You'll see cash journeys, some are advice-driven journeys. And as the customer follows these journeys, they'll move between the different zones of the branch, being able to leverage different self or assisted devices as they go to help improve their experience, as well as that of the branch and the branch staff. So now we'll jump into the demo and show you two journeys that will help bring some of these concepts to life. In the new normal, we're seeing innovative interaction styles evolving in the bank branches. Customers are more willing to use their mobile rather than touching ATMs or kiosk machines. So today, we're going to be showing you two journeys. In our first journey, we'll see how our solution is transforming the physical bank branches by introducing paperless, contactless, and a unified front end for tellers, sellers, and other branch members. In our second journey, we'll see how our solution is enabling our branch staff who are working from home to support customer transactions from multiple channels using our modern web-based solution. So let's get started with our first demo. In this demo, we will see a customer of the bank, Mr. Archie Andrews, visiting the bank branch to complete a banking transaction. We will see how Archie is able to provide transaction details in a contactless manner, using e-forms enabled with artificial intelligence capabilities to pass check details using intelligent character recognition without touching any of the surfaces or papers in the bank. Within this journey, we'll also see Martin, who is a teller in the bank branch, using a unified front-end solution to sell, solve, and serve the customers while completing the transactions in a paperless manner. Let's start our journey from the perspective of Archie Andrews when he visits the bank. It has been quite some time since Archie had visited the bank, and this time whilst visiting, he sees that the self-service terminals, which are usually busy, are now lying empty. Archie notices that he has received a push notification on his mobile phone stating that now he can sign into the branch network without going to the self-service terminal. Archie is a tech-savvy customer and would like to try this new tech that the bank has to offer. So he goes ahead to sign in, which redirects Archie to this page where he's asked to provide his mobile number. Once Archie provides his mobile number and goes ahead to continue, he receives a one-time password to his mobile phone, which he needs to fill in. The system then identifies Archie from his mobile number. However, in order to give him access to the transactions, there needs to be a second factor authentication. Archie is now asked to answer a few security questions. For example, here we can see that Archie is providing the second and fourth letter to his mother's maiden name. After he's authenticated, the system knows the last time Archie has visited the bank and also provides Archie with different serving options. As Archie is here to complete a teller transaction, he goes ahead to select the relevant option. He's then presented with the list of transactions that he can complete. After selecting the check deposit transaction, Archie receives a ticket number and can also see the number of people that are currently waiting. However, Archie also has the option to provide some transaction details that could allow him to be called in earlier. Archie is very interested in this and agrees to provide the transaction details here. Since this is a check deposit transaction, relevant fields are dynamically displayed with respect to this particular transaction. Again, we don't want Archie to be filling in this information manually, so Archie can go ahead and take a photograph of his check using just the camera of his mobile. From the captured image, the relevant information is extracted and placed at the appropriate fields. This is made possible by passing the check details using the intelligent character recognition by the Microsoft Cognitive Services that can even read the handwritten data from the check. Archie then verifies the details that have been fetched from the check and confirms them. Upon confirmation, he's able to see the e-form number is generated for him. If required, Archie can go ahead and add another request that would be added to the same e-form number. In this way, we see that without touching any of the surfaces, kiosks or paper within the bank branch, Archie was able to provide the transaction details. Using the check passing capabilities, we're able to significantly reduce the transaction details filling time. These capabilities also allow for quicker transactions, since the chances of error during manually filling of e-forms are reduced. In a new normal, we are witnessing such interaction styles evolving that allows the bank to operate and utilize the branch networks whilst making customers feel safer. Now that we've seen how the customer was able to use the digital touchless solution in order to provide the transaction details, we'll now look at how our teller, Martin Barrows, is enabled with a unified front end to sell, solve and serve the customers, whilst enabling banks to build the digital branches. Martin is enabled with a personalised dashboard where he can see information about the transactions which he has completed. Martin can also look at the different announcements by the bank, and within the same dashboard he's able to see the different activities that are awaiting action. As Martin clicks on the next button, calling the subsequent customer in the queue, he's presented with a single view of the next customer, which in this case is Archie Andrews. Using the single view, Martin can very quickly have a clear picture of the customer's relationship with the bank. He can see the customer's active products, the different channels which the customer is using, and other details of how the customer is structured within the bank. Once the customer approaches Martin's desk to present his transaction requirement, with one single click, Martin can open the Enterprise Transactions pad, which represents the unified front end for Martin to serve his customers, as it gives him access to a wide range of transactions. These include the account management transactions, loan management transactions, card management transactions, cash and check transactions, and different kinds of fund transfer and bill payments. In this particular case, since the customer is walking in for a check deposit, Martin can click on this, which opens up the form he needs to fill in order to complete the transaction. Now, since this customer has already filled in the information through the digital e-form, Martin doesn't have to fill in these details again. He can simply click on the Load from e-forms button to retrieve the information, which populates the relevant fields with provided information. The ability to retrieve the information from the e-forms allows Martin to speed up the transaction, which provides service efficiencies. After reviewing the information, Martin can go ahead to verify the details by making a background check with the core banking solutions to verify the provided information. Upon verification, the teller continues to confirm these transaction details. At the confirmation stage, Martin verifies the signature on the check along with the signatures that are available for this particular check issuing account in the system. This could be either a manual or an automatic verification. If at any point of time Martin has doubts regarding any of the associated information of the transaction, he can forward this particular transaction for an approval as well. That would ultimately trigger either a remote or a local approval. Also, at the confirmation stage, Martin needs to authenticate the customer. However, we don't want the customer to sign on any paper or touch any surfaces in the branch. Hence, this verification is done using a one-time password, which the customer receives on his mobile. But if the customer doesn't want to validate with OTP, they can be validated by either capturing digital signatures or through biometric verification. As we're focused on a contactless journey in this demo, we'll validate using OTP. Once the customer provides the OTP, he is authenticated and the transaction can be taken forward. As Martin continues to execute the transaction, we see an acknowledgement receipt gets generated and is sent as an email to the customer, which completes the transaction. As the transaction is executed in a contactless manner, the customer feels relieved and safe at the same time. So we've just seen a very advanced scenario. It's a web-based scenario with a unified front end, which is very easy for the teller to use and complete multiple different transactions without having to use different systems. We've also seen how the customer uses the e-forms enabled with artificial intelligence capabilities to pass checks, which significantly reduces the customer's effort required to fill in e-forms, and witness how we eliminated the need to perform a maker-checker verification on the transaction by authenticating the customer using a one-time password. We also saw how the teller was able to retrieve an e-form information and pre-populate the transaction forms. Without any touch and with the efficiencies of AI, the branch visit was safe and efficient. So that's the end of our first demo. In our second demo scenario, we're going to be looking at how our solution is enabling our branch staff working from home. What we've been seeing recently is that less customers are willing to visit the bank branches, and even seeing that some clients can only have 30% of their branch staff in the branches at one time, with the rest of them working from home. The contact centre is not able to keep up with the incoming calls, so calls coming from personal banking customers are diverted to the home lines of our branch staff. The challenge this poses is, with the customers at home and the branch staff at home, the contact centre's just too busy to handle all the requests. On top of that, the customers are now looking to communicate with the banks using their preferred channels, which could be WhatsApp, voice calls, video calls, live chats, and other social channels. Let's now look at how our solution can enable the bank branches to adopt this new way of working. In this demo, we're going to see Angela Zoe, a customer service representative at the bank's Brooklyn High Street branch, currently working from home using the Dynamics omnichannel application to support customer requests through WhatsApp, live chat, Messenger, phone calls, and video calls in the form of different sessions. Let me also introduce you to our customer, Jack Martin, who comes from Chicago and is currently working in Brooklyn. Jack got connected with his college friends using a WhatsApp group recently. The friends started planning a vacation once the travel bans are lifted and wants to start saving for the trip. He connects to the bank via his WhatsApp chatbot to look for short-term deposit options. Within a few minutes, he finds himself talking with Angela, our branch staff member working from home, in order to open the short-term deposit account. I'll open the customer's communication using WhatsApp on the left side of the screen, whilst the customer service representative dashboard enabled with omnichannel solution on the right side. Let's start our journey with the experience Jack will have whilst interacting with the bank using WhatsApp. As Jack goes ahead to initiate the communication, this communication is first responded by a bot. Jack can go ahead and complete different transactions like making a bill payment or fund transfer, but for now Jack has a query and provides more details about what he's looking for. Using natural language processing, the bot understands the subject of Jack's query and comes back with a knowledge-based article which allows Jack to find out more details of the short-term deposit accounts. Jack's happy with everything presented to him and wants to go ahead and open the term deposit account. The bot then asks Jack whether he would like to proceed, which Jack's happy with as it allows him to complete the process without having to visit the bank branch physically. Jack goes ahead to apply, and before initiating the process, he's verified based on a set of security questions. Here we can see Jack providing details about his mother's maiden name and the amount of the last transaction which he has completed. As Jack answers these questions and is verified on the go, he can decide how he wants to apply for the term deposit account. He can either do it using self-service channels like mobile app or internet banking portal, or he can get in touch with the branch staff over the same WhatsApp channel in order to continue the application process. Jack would like to continue by having a conversation with the branch staff, and based on his selection, the chat is automatically routed to a customer service representative with knowledge in short-term deposit accounts. Whilst Jack's request is routed to Angela, to the right of the screen on Angela's personalised dashboard, she can see an incoming request and goes ahead to accept it. As Angela accepts the request, in order to provide personalised assistance to the customer, the single view of the customer opens for her, where she can see the customer's existing accounts and other details. She can see the communication which the customer has had with the bot and understands that the customer is looking for assistance with regards to opening a short-term deposit account. Using Microsoft Cognitive Services, which analyse the customer's interaction with a bot, Angela can also see a neutral customer sentiment. Using quick replies, Angela introduces herself to the customer, and with one single click, she lands on the Enterprise Transactions pad, which is a web-based branch application giving her access to a wide range of transactions. This is actually the same unified front-end application which we saw a few moments back used by the teller in the bank branch. However, this time Angela is using it from the comfort of her own home. Angela clicks on opening a term deposit account, which opens up the form where she can go ahead and fill in the relevant details. Using the chat communication, Angela can ask the customer what term period he's looking for, what's the amount he's planning to allocate, which account he would like to use in order to allocate the funds, and what's going to be the instruction once this particular term ends. Based on the customer's selection, Angela tells him the amount that he's going to be receiving at the end of the term period. Angela then confirms the transaction. At the end of the confirmation stage, the customer is verified using a one-time password. Angela uses that one-time password provided by the customer in order to execute the transaction which opens the short-term deposit account for the customer without him having to visit the branch. In this demo, we saw how an omnichannel service is imperative for banks. We saw how the customers of the bank now have the chance to engage and transact using their preferred channels, and being customer-centric allows the conversation to seamlessly move from the bot to a branch staff member working from home. The enablement of the branch staff with a web-based branch application allows them to complete different banking transactions for their customers. In the new normal, we're seeing such interaction styles evolving and shaping the bank's digital-first strategies. The potential of one single web-based front-end branch application to handle chats, live communications, and provide transactional support allows banks to reinvent the nature of bank branches in this new normal. Thank you for your time, everyone. And with that, Catherine, back to you.
Thank you, Steve. I would now like to invite all presenters to turn their cameras back on to take some questions from the audience. And I'm looking at the first one. That's one for you, Jeff. Someone asks what's or how you see the role of the branch for younger demographics, because we often hear younger people use digital channels. They don't want to go to the branch.
Yeah. Yeah, so I think we hear that quite a bit, right? When we ask about channel usage for the different age demographics, in this particular survey, we did not prove that out. As a matter of fact, what we actually found was that the younger demographic is actually the least inclined to use that digital-led channel behavior when they interact with their bank. In this particular study, what we found was that about 18% of consumers that were aged 55 and older interacted with their bank only through that branch channel. And that was more than double than any other group. It's also true that of that same group, about 6% acted through digital means only, which is slightly more than that 18 to 34 demographic, which was only about 5%. Right, so I'm not sure that we can actually make a claim that says younger demographics prefer digital over a branch. What we actually found was that in that 18 to 34 age demographic, they didn't leverage that mostly digital approach. What they actually leveraged was the multi-channel branch approach. So about 1/3 said that they used mostly people, but some technology. And about another third actually said that, well, we use people and technology equal, right? So I think it's interesting, right? When we find that that youngest demographic is least likely to use that digital first engagement model, I think it does reinforce the importance of the branch. Now, I'm not sure if we know if the younger demographic actually enjoys going to the branch, but I think they certainly value being able to connect with a person.
Okay, thank you. Another one I see here, maybe for you, Vijay. Someone asks about our solutions with all these channels that are interconnected to provide digital and a contactless experience. How does VeriPark ensure that the information and data across channels are secured and customer identity is protected?
A very pertinent question indeed. I would start from the journey, that we saw a few minutes back. One could see how customers are verified at every execution stage of the transaction through two-factor authentication, like OTP, security questions, etc., and a real-time communication being sent to the customer's registered device to ensure customer identity. Also, our platform is enabled with biometric, facial recognition tools, etc., to precisely identify customers before the transaction is executed. With respect to information and data security, VeriPark ensures during implementation, all the bank security standards are embedded as part of the solution to protect the customer's data. Last but not the least, the data storage within our solution is well protected with latest encrypted technologies as well.
Okay, thank you, Vijay. Another one for you, Jeff. Someone asked, when you looked at channel behaviors, were there specific types of value customers look for when considering in-person versus digital interactions?
Yes, so there actually were some value drivers that customers clearly favored for one channel over the other, and I think it's a good question because I think you can use those differences to really inform your digital roadmap and figure out how you can play to the individual strengths of each channel. What we found is that customers, they associate people with expertise, and so they clearly prefer branches when they're looking for someone who can really provide them with knowledge to help them with a specific situation. They also rely on branch personnel to complement that knowledge with kind of an objective perspective, or maybe even a recommendation that helps them kind of weigh or sort through the available options, right? Something that helps them make sense of their specific situation. For digital, I don't think time shouldn't come as a surprise for the value of the digital channel. I think while this seems self-evident, I think banks tend to really overweight the time benefits of digital versus personal channels. What I think may actually come as a surprise is that the time value driver actually gets a bit of importance when we look at the branch only model, because sometimes customers perceive that it's going to be easier and quicker to just go to the branch and solve their problems. So I think that speaks to the importance of really enabling and empowering your branch staff to be able to support those digital customers, right? That branch is the place of last resort to get problems solved in some cases. I think customers also rely on digital when it comes to the bank prompting the customer for action, right? Something that needs to be done, keeping them on track towards some specific goals. I think the digital channel is excellent for delivering those. My recommendation to banks would be, it's not just about providing kind of the information, but you should also be providing the recommendations or the actions that a customer should take, not just informing the customer of a specific condition.
Thank you. Another one for VeriPark. Someone wants to know if we have used or implemented this technology in the developing worlds. So Vijay or Syed, maybe?
Yeah.
Yes, Syed.
Yeah. So in order to answer that question, like we do have implementation examples where we have deployed this unified front-end solution, and in the developing world where we're looking at implementations in the Middle Eastern region, we'd be more than happy to share specific customer details through our emails and preferred and communications that would follow after this.
Okay, yes, I was going to suggest the same thing, so we can exchange and see what exactly you're interested in, and then share some references with you, definitely. Jeff, another one for you. Someone asks, customer experience is one of the most discussed topics when it comes to digital channels. How do you view banks' progress on improving the digital experience in that matter?
Yeah, so this is a topic that I think comes up over and over again, and obviously is a top priority for most banks, regardless of the channel. When I think about customer experience in the digital channel, I think banks for too long have really focused on digital as a way to optimize transaction channel cost. And I think banks were very successful at this. Right? They were able to take those higher cost transactions that might happen in the branch or in the contact center and move those to the lower cost mobile channel. I think what's happened as a result of that is banks lost a bit of that customer intimacy or that customer relationship that comes with person-to-person interactions. And so when I look at customer experience in digital, I think it's about, to some extent, removing the friction, making it easier for customers to use the service. But I also think it's about personalizing and adding new value through the digital channel. So this would be, we see instances where banks are looking at identifying the goals of customers and then providing them what I would call algorithmic advice through the digital channel. I think that's a much more personal connection. I think that has more value for the customer. And I think it moves the bank up kind of in that experience pyramid and leads to more customer intimacy, a better customer relationship. So I think that's where banks are focused when it comes to customer experience. A bit of let's make it easy, but let's also make it personalized and add new value to that channel.
Yeah, and as you said, it's not because it's digital that it can't be personal. So that's important. Maybe we have time for one last question here that you might not have seen yet because there were a lot of questions for you. But someone asked if you have a sense of how far the branch or the digital halo extends. Is it also true for more rural geographies with towns quite far from each other? So how, in terms of physical distance, I guess.
Yeah. So I don't have data, or I don't know of data that specifically points to the range or the extent of that halo effect. But I think it's pretty relative, right? So what I think you have to consider is access to that branch, right? Being able to access an expert, right? Being able to go in and get some personalized recommendations, right? Being able to go in if I have problems interacting digital again and go to that branch location. I think that's what drives the additional digital engagement because the fact is I know that there is a location that I can go to for additional support. Again, I think it depends on kind of the it's relative on a customer by customer basis. If driving an hour is acceptable and I do that all the time, then I would probably feel comfortable driving an hour to get that support at the branch. I would think the halo effect might extend that far. If I typically don't go more than a couple of miles from my house, I think the range of the digital halo would also be condensed as well.
Okay, thank you very much. So as far as I see, I think that's all we have time for today. I would like to thank everyone again, both Gartner, from Gartner, of course, and my colleagues from VeriPark. I hope the audience enjoyed the session. I think there's definitely food for thought with what you heard here. And as I said, you will receive a link to the recording, you will receive the presentations, and we hope we will be able to connect with you personally in the very near future. So don't hesitate to reach out, to ask your questions if you have some, and keep an eye on our website and our news section, because we will definitely repeat this and there will be more webinars to come in the future. So thank you, everyone, and have a nice day or end of your day. Bye.
So bye.
Thank you very much.
Thanks,
Jeff. Thanks, Steve. Thanks, Catherine.
Thanks.
Thank you. Bye-bye.
Bye-bye.